Now listen, 95% of all influencers, founders, and projects are total and utter scammers. In fact, a report just came out yesterday that says that 97.7% of all Uniswap projects were rug pulls. So if that's not enough to tell you that crypto is filled with scammers, I don't know what is. So there are hidden and dark secrets of the crypto industry that you are very likely completely unaware of. Now, some of these things include the true nature of VCs, how you'll pretty much just exit liquidity for someone else, and how influencers actually make money in the crypto space. And so the longer that you continue on without understanding the secrets that I'm going to be explaining to you, the longer it's going to be before you make the returns that you really need to see in crypto, because you're just going to continue getting rug pulled or not picking the right projects to invest in. And so without further ado, here are the 5 secrets of crypto that they don't want you to know about. And so secret number 1 is the Aptos Insider scamming playbook. So before we start, we have to go over what Aptos is. Aptos is a layer 1 protocol, basically a Solana copycat, the Solana killer is what they like to call it. And so Aptos is different than Solana because it's built on the Move programming language, and some of the technology was inspired by some of the work of Libra, which is the blockchain technology firm spin-off of Facebook. And so if you look at the photo below, you'll see the Aptos ecosystem. Wow, it's just so many projects, right? It's just this amazing ecosystem. Hundreds of people are already building on Aptos. Well, that's the first impression, but the reality, the secret of this is that this is just another scam done to take your money. So let me explain. There's 7 steps of how Aptos is basically scamming you through building this huge ecosystem. So step number 1 is that Aptos builds this really great founder team of really smart people, and they bring in VCs to invest heaps of capital to get cheap APT tokens, which are locked up for a year to several years. And so step 2 is that Aptos recruits all their friends, their family, business associates, friends of friends to basically build the ecosystem of Aptos. And how it works is basically the founders will be like, hey, Joseph, I remember you from back at this business I used to work at. Yeah. Look, I want you to build 5 projects on Aptos, and I'm going to pay you handsomely to build 5 projects. I don't care, just copycat Ethereum or something. And so Joseph goes, oh, fuck yeah, I'm going to get paid $1,000 an hour for my time in these tokens, which I can sell. And all they have to do is just copycat some project off Ethereum. And so this is what 95% of projects on Aptos are basically are. It's just copycat scams from people who are friends of the Aptos team. And so the entire ecosystem basically just becomes this big copycat of Ethereum and Solana. And what they do is they launch Aptos with this huge ecosystem out the gate, and Aptos gets this huge $1 billion market cap valuation and a $4 billion fully diluted valuation. And so the way that the VCs make money from this, which is sort of scammy, is the VCs buy the coins really low before anyone else can. And then when the coins get listed on exchanges for the retail to buy, they list the perpetual contracts as well. And the perpetual contracts allow the VCs to basically short Aptos at a really high price on launch, so that even if the price drops back to, $5, $4, whatever it is, they've locked in a huge sell price for their tokens. Even though their tokens are locked, they can lock it in. How does this work? Well, if you buy $100 of a coin and in another exchange you short $100 of the same coin, it doesn't matter what the price of the coin does, you will make an equal profit and equal loss depending on what it does. So Aptos might have VCs with $100 million in profit. They'll just short $100 million of Aptos tokens, and that locks in their sell price, so they don't even lose money when everyone else is trying to sell. And so right out the gate, Aptos has launched what they call a community fund, which has 125 million APT tokens. You can see it in the photo here. There's the green, that's all the community tokens. 125 million Aptos is about $1 billion because each APT is worth $8. So it's about $1 billion they've got in funds to basically build and support projects, grants, and other community growth initiatives. So you can imagine where this is going. Builders on Aptos basically get $1,000 an hour for their time paid in APT tokens, which they sell for US dollars, to build this shitty copycat ecosystem on Aptos. And the VCs get rich because they short Aptos from the hype, locking in their huge profits from buying really early. And then retail gets destroyed because they buy the tokens after everyone else bought them lower. And they also buy tokens into the people who are selling, which is the insiders. So retail, again, gets scammed, and the winners are the founders and the VCs. as usual. And so the second secret of crypto that they don't want you to know is that on-chain is mostly bullshit. All the crypto influencer charlatans, they love to show you stock to flow models, rainbow charts, all these bullshit on-chain tools that never actually work. On-chain tools look great because what they do is they combine this random combination of arbitrary variables. They put this here, they put this here, they put this here, and they combine variables until they find a combination that looks really good in the past. And so they'll show you a combination and they'll show you how good it bought the bottom and sold the top, and they'll go, so because it worked in the past, it's going to work in the future. And they use this to basically engagement bait you, it's clickbait, to then sell you some shitty on-chain indicators. When in reality, the only way you can make money from a data set or an algorithm or an indicator is if it makes you money in the future. But 99% of all on-chain tools have never predicted anything in the future. So 99% are useless. This is why the Hunter algorithms that I invented are so useful. I invented them 15 months ago, and the code that we made to invent them hasn't changed since. And it's literally bought every bottom and sold every top with about 80 to 90% accuracy. No other tool in crypto has done this, yet no one talks about it. They all want to sell you their shitty on-chain tools. And so the fourth secret they don't want you to know is that we are going to make it is a lie. Markets are zero sum. And what zero sum means is that if you make $1 from crypto, you actually stole that dollar from someone else. You stole it out of someone's wallet. If someone makes $1 in crypto and you lose money, you just donated money to them. They stole it from you, basically. And so everyone in crypto is competing for your money. So whenever you think you've found some really great influencer who is so kind to give you these free signals, or some project seems like it's really good and they're just going to do what's best for you, all they're trying to do is just take your money. That's all they're trying to do. It's a PvP market, player versus player. And so when you're in crypto, you need to keep this in mind. There's never a we're all going to make it, everyone's going to get rich. People get rich off the back of someone else getting poor. And so the fourth secret is that funding data is the most important data in crypto. So forget on-chain, forget RSI, forget MACD, funding data is the most useful. And let me explain why. Funding data is a measurement of how much long traders pay short traders, or vice versa. So funding data was basically created to bring balance between the price of Bitcoin, or whatever the coin is, on Binance and Bybit, or whatever the spot or in the derivatives exchange. It was to bring the prices on two different types of exchanges, leverage and no leverage, to be the same. So what happens sometimes is on Bybit, an exchange where you use leverage, the price might go above the price on Binance, where the price will be not driven by leverage. It'll be just driven by spot buyers. And when you have this difference in price, it causes issues because that's not a fair market. And so what Bybit and these other derivatives exchanges do is they punish people who are pushing the price away from the price of other exchanges. So if on Bybit the price is going up above Binance, they want to punish the people buying. And so what they do is they charge a fee for people who are holding long positions. What they say is that, look, I know all you fuckers on Bybit who are apes, you're trying to long Bitcoin to the moon. I know you all think it's going to the moon right now, but we can't let you all long at the same time because you're causing issues. So we're going to punish you. If you want the privilege to go long when everyone else is, you have to pay a fee because you're causing issues. And so this fee is the funding data. And the beauty of funding data is it represents something real about markets. It represents what people are actually doing and the positioning of what they think is going to happen. So the stock to flow model, what does it tell you? It tells you some random calculation of supply. It's just a supply calculation. What does funding data tell you? It tells you the positioning of the average market participant. So why is this useful? Well, in crypto, you want to do the opposite of the herd. So if the herd is all buying, you don't want to be buying because the herd is buying. The herd always loses money, so you do the opposite of the herd. Bybit traders, or whatever derivatives exchange, the average trader on those exchanges is the herd. So if the herd on Bybit is all buying Bitcoin with leverage, and they're pushing the price on Bybit above Binance, that is a sign that they are all expecting the price to go up, and it's a sign that you need to do the opposite of them. And so this is how I coded the Hunter algorithms. It allows us to buy bottoms and sell tops because we just do the opposite of what most people are doing, as seen through funding data. It's genius, isn't it? But no one will tell you about this. It's a secret. And so the fifth secret that they don't want you to know is that you can get rich following signals. Now, this is totally false. You will not make $1 million following signals. Maybe 1 out of 1 million people do. And this is some exception to the rule, but the exception does not disprove the rule. Signals are designed to do two things. They are designed to, one, make you a bit of money following a signal. 2, show you what actually is a winning trade and a losing trade so that you can follow your own. Signals are not designed for you to get rich. They're not a form of passive income. They're none of that. There's 3 reasons. The person who gives you the trade is consistently profitable following these trades or investments, whatever it is, because they are the first one to enter and exit. They can act immediately on any changes in the market that they see. And they have the most important part of trading, which is the emotional control and risk management. When you are trying to follow a trader, you are entering second. They change their position first and then they tell you. You don't get to act immediately because are you going to be ready 2 seconds after every single message for an entire year to follow a trader? No, you're going to miss some. You're going to miss his best trade. You're going to miss the exit by 5%. Shit's going to go wrong. That's normal. And so also, if you're following someone, you lack the most fundamental skill of trading and investing in NFTs and everything, which is emotional control and risk management. And so yes, obviously signal following is like the training wheels of a bike, right? It's basically teaching you what you need to do so that you can go and do it yourself later. But please do not use signals as a way for you to get rich. It does not happen. It's a trick of these paid group leaders to convince you to join their groups. And so those are the 5 secrets that they don't want you to know about crypto. Now, if you found this video interesting, you're going to absolutely love my latest crypto guide. It's called The Psychology of the Crypto Markets. Now, I don't charge a penny for these guides. I just love making them and teaching you guys about crypto. So if you want a copy, you'll find it below in the description. And thank you for watching. I'll see you in the next video.